Hello and welcome to Crux Investor. We caught up with Brad Langle, CEO of Go Gold Resources earlier today, following a press release, some pretty good grades in there. And we talked through those. If you want our thoughts and opinions on the conversation, the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports, commentary from experts from around the world on a variety of commodities and companies. There are training videos on there. Summaries of other interviews that we've done just to save you a bit of time. Of course, there's a thriving community of investors sharing their thoughts and ideas with each other. So go along and join them at cruxinvestor.com/club. And of course, we love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, take a look in the description below. Brad, how you doing, sir?
Good, great.
Yeah.
Big smile on my face this morning. Great. I think we had some great results.
You did. That's why I'm calling. I know you're in the middle of a conference and you very kindly made some time for us, but I saw the press release this morning, 3,675 grams of silver equivalent. Wow. You really got to be pleased with that.
Yeah, we are. We're very pleased with it. And it's at our Alpha Vor zone. And I'm not actually there, but that's a picture of it behind me in the background here. That's Alpha Vor. So,
oh, you're whipping up a presentation, are you? Okay.
Yeah.
Okay. Well, look, I know you're probably going to be doing a few of these over the next few days at the one-to-one conference. So, are there some things that you can share with us today with regards to the announcement?
Yeah. No. Really, it's back to the Los Ricos district, and it's gonna be the driver of the company for the next couple of years, and especially in the next 12 months. We have that big drill program of 100,000 meters budgeted, $20 million drill program. Most of it is focused up here in Los Ricos North, and that is turning out to be what we believe is a very, very large mineralized system. Again, it's 35 kilometers of district here, and in the south is where we've drilled off that 83 million ounces of silver equivalent at about 200 grams per ton silver equivalent in pit. But now we're up here in Los Ricos North. So in Los Ricos North, an overview up there, it's, again, big mineralized system. We're looking here at about 12 kilometers squared, and we're going to zero in on Favor, one of the 3 resource drill targets we're drilling right now. And I'll just touch at the end here on El Arito because it's significant in it's the same structure over 3 kilometers away. And we just drilled a couple holes there, which will really be discovery holes. But here at El Favor, we're well on our way to drilling resources. And of course, first we went in there and over 1,400 meters of strike, and you can see multiple structures there. We did a lot of sampling on surface with some great results. And what's really good is that the drilling we're now carrying out is showing what we've seen on surface. Now this map is a little bit of a cartoon, but it's making a point that here over 1,000 meters with these holes that we've released so far, we're up to 10 holes that we've released, and we are drilling hole 24 right now. We have 4 drill rigs working up here, and this morning from drill hole number 8, and starting on surface, we drilled 52 meters of over 300 grams of silver equivalent. And 5 meters of that, and that was right at the top of the hole, was 5 meters of over almost 2.5 kilos. So very, very high grade. And really, as we move along strike, to the east and to the west, we see more and more of that. And still even grades of 41 meters at 92 grams silver equivalent right on surface is very good stuff for us for potential bulk mining. And within that, and that's to the extreme east on this structure over here, that's 4 meters of half a kilo in there. And, in the center, we have 27 meters of 185 grams. Down to the eastern end, we have a area that they call the pit. And that's right along the roadside there. And I've been to that area. It's just a little dig, like a gravel dig along, a road. and they're sampled 29 meters of 176 grams right on surface. So you're talking now, we moved along about 800 meters here. And then at the extreme southern end there, just the first hole down there, but 21 meters of 82 grams, 9 meters of 167. And we've got real depth extension of this thing as well. You can see there, we've tried to display our initial kind of look at the structures with topography laid over it. And there's, we see at least 500 meters of depth extension in these. So you put that all together and, and you start seeing things like this in the first 10 holes, 300 grams, 700 grams, a couple half kilo, 600 grams over 7 meters, and then we have the, today 30 with 52 meters of 300 grams. And you start seeing those things over and over, and it just seems so much like, and maybe even better than what we've just drilled off in the south, which was 83 million ounces of silver equivalent. So for us, we look at this one target, El Favor, and we think, that's something that really is Los Ricos South right there. And we've got all these others. So that's Favor up there. And we have all these others that we are just now drilling. So that's Favor, La Trini. We've talked a lot about that. We have just about 70 drill holes into that right now. And that's, where we started. Favor is lining up this one target to be something that we see as having the same exploration potential or more as what we drilled off in the south. El Arito, I'd like to talk about that for just a second. El Arito is one of those kind of target generation targets that we have 105 of them now that the team has put together. And this one, they wanted to get in there right away and put a couple holes in there, which we've done. And the first 2 holes on the first drill pad in there, and it wasn't, from our surface mapping, that wasn't the best area to drill. It was the easiest area to get to first. And those first 2 holes, we're going to have those out for sure in the next 2 weeks. We'll get those out there to the market. But I think we're on to something there as well. And that's, 3 kilometers along strike of where we've just drilled that 52 meters of 300 grams. So yeah, it's looking really, really exciting, Matt.
It really is. And I'm just conscious of time here. That's why I'm not interrupting too much. Because one, you've talked about getting 8 to 10 drills running before Christmas. Are you still going to be able to do that?
Yes, we will have 8 drill rigs running. There are 6 running right now, and there's 2 on the highway going to site right now.
Right.
And those 2 are going to focus on this area called Casados. And that's where we just picked up that 40 hectare claim. We have legacy data from a long time ago, which of course we can't use in the resource, but it guides our drilling. And it's really high grade legacy data. So we think we have something there again, that with those 2 drill rigs, I don't think we'll leave from there for the next 6 months. We'll just be drilling away.
Okay, so the plan here hasn't changed. The drills are going in to prove up the scale of Los Ricos North, and you've got months ahead of you in terms of drilling. So we should expect to see lots of information. So far, is it delivering what you thought?
Beyond what we thought. Definitely. It is, Los Ricos district is definitely, for myself and the team, if not the best thing that I've had in my career, certainly the best thing in 20 years since Ocampo, where we defined 7 million ounces of gold equivalent resource. So, Los Ricos South, look for a PEA in the coming weeks out of Los Ricos South. And that PEA is focused around where we've already drilled off 63 million ounces of measured and indicated, and another 20 million ounces of silver equivalent. Los Ricos North in our opinion, has far bigger exploration potential. We see it as the bigger part of the mineral system. And, we have 100,000 meters to be drilled there in the next 12 months. So this is literally going to be one of the biggest exploration projects in the country over the next 12 months.
And do you think, given the current environment, that eyes are going to be on you? Because if you continue at this rate with that number of meters and the results are, let's say, comparable to what you're seeing now, this starts to become a very sizable, meaningful project. And do you take advantage of it sooner rather than later, or are we building a mine here, guys?
Well, in Los Ricos South, with what we're doing down there, that in itself is a significant deposit. And we thought to do the PEA and to, show the market, to show the investors, hey, this grade, a couple 100 grams silver equivalent in a pit, that can have these economics. And then Los Ricos North, we look at that and we say, this is such a big mineralized system. Let's just drill, and show lots and lots of ounces. And I think people will look at the South and say, okay, that grade, it seems to be the same kind of tenor of grade, in the North, or maybe even a little better. And, it'll be pretty easy to see, hey, what kind of value that could have. I think Los Ricos North will be best served by drilling. And that's why we raised the money. That's why we have $52 million US cash. Corral's making us more than $2 million US a month of free cash flow. We have the capital to do this. We have as many targets as we can get drill rigs to. That's our, not challenge. That's what we have to do.
Okay.
Get drill rigs on the target.
So look, we've had our analysts look at this. There's something really good here. We believe that. Just help people with some of the terminology. You kind of flip between silver equivalent and kilos per ton, because miners refer to it in a slightly different way to the way that perhaps the market looks at it. Tell me about the difference between those two, because I want to kind of have a discussion about comps in a second.
Yeah. So, I'm guilty of thinking of things in gold equivalent, because that's, most of my history building mines and everything, the economics was in gold equivalent. This is a silver project. It's 60% of its value in silver and 40% in gold. 200 grams per ton silver equivalent, for example, in an open pit is, the equivalent of 2.25 grams gold, which is there's just not a lot of open pits, at least in the Americas, that have not been mined or are being mined at those kind of grades. So this should have very, very good economics. I mean, the economics, of course, will be proved out in our economic studies like the PEA, and in the South, we'll advance that to a pre-feasibility. But it's we have to think about this in the silver equivalent. And as far as the assets out there that are real silver mines, and there's not a lot in the market. And I think the grade of this compares extremely well to other silver producers.
Well, talk to me like who should we, retail investors, be looking at this and saying, you know what, that's just a little bit like X, Y, or Z, because there's a lot of silver stories out there at the moment. We happen to think that this one has got the opportunity of scale behind it, and the grades are solid. But it's about what you can build out, what value you can build out for our shareholders. So what should we be thinking about when we're looking at your project?
Yeah, well, if you look at this and there's some great successes in narrow vein, underground, high grade targets in Mexico over the last couple of years. And, high grade, and of course here we see very high grade, we see it over, 5 meters. There's, underground silver projects that are more, the meter, but they're confined to a couple meters, and, they don't have that big halo of medium grade around them that make them open pit mineable. The advantage of open pit is it's technically easier in most cases, and you can develop it faster. And really, when you're drilling very narrow vein structures, it takes a lot of drilling to define those targets, in the hundreds of thousands of meters. But here with 100,000 meters over the next 12 months, in widths that are up to 50 meters and 300 grams, we can potentially develop, millions and millions or hundreds of millions of ounces of silver equivalent, because it's bulk, it's bulk, big tonnage, big grades. So that is comparing narrow vein to what we have, which is really, really good grade. But the best thing, it's lots and lots and lots of tons of this really, really good grade. So that's the advantage here. Now, there are other deposits in the silver space that have bulk, that could be bulk mineable, open pit. But, I don't think their grades come very close to the grades that we're seeing here. Their grades might be a third or less of the grades that we're seeing here. So those ones, in a very, very strong silver market, they can have economics. But, we're dealing with something here that in a strong silver market, it could have extremely good economics and make a lot of money. And then in the bottom of the cycle, if the silver price is down, at a couple 100 gram silver, hey, this is still economic and can still make great money. So that's the advantage we see in Los Ricos. It's one of those projects that you see, once, you're lucky if you see twice in your career, that has, it has everything. We're focused here now on the very obvious, open pitable, big tonnage, big grades, and eventually we'll get to, maybe the underground veins. But right now we have so much to drill in the open pit kind of targets and great grades in the open pit kind of targets.
Yeah, thanks for that, because I think it's important for, for me and people watching this to understand the difference between seeing these headline grabbing high grade type projects, because they do get people excited, and talking about what you were talking about, was the important bit of what you said there is the amount of silver in there. It's a lot of tonnage in there, and it's cheap to get at because it's open pitable before you start chasing high grade veins everywhere. I thought that was
and that's a good distinction to make, and I find there's one matrix that some people use when you're trying to compare an apple to an orange, underground to open pit, and that's grade tonnage, or grade thickness, sorry. So if you look at an interval or a width of a mineralized zone, and you take everything down to a meter, you take the grade across, say, 50 meters, if it's 300 grams, and you multiply that to bring it down to what it would be if it was a meter. And if you're picking cutoff grades that are open pit grades, and if in the underground you're picking cutoff grades that are underground grades, you multiply that out, and the grade thickness would be 15 kilos if it was comparing it to something that's a meter wide. So they're different. They're different. One's an open pit target, one's an underground. But that's a good way to make some comparison between them, because you can get a lot of headlines. You've got meter wide at astronomical grade, or 2.5 kilos, 3 kilos, 4 kilos. But really what's important, and to me, I love that 5 meters of 2.5 kilos. That's beautiful. That'll be great stuff for underground mining. But we're fortunate because we have it within a zone that's 50 meters wide and 300 grams. And we can mine that out in an open pit, and we can mine that out where, that's at the top of a mountain, and it's kind of dip slope running down the side of that mountain to the valley. We're hoping that it's going to have some really good strip ratios there as well.
Well, that's what the question from earlier. I just wanted to understand how miners think of this, and I think you just perfectly explained how you're looking at some of these intervals that you're identifying now. I'm very conscious of time. You've got another call to do, and I guess imagine for the rest of the day in about 5 minutes. So thanks for picking up the phone to us. Really appreciate it. Let's have a proper call maybe when you get out of this kind of conference session that you're in for the next few days. Okay.
Great. Thank you.